We see stocks up for the day on Monday, bonds and gold down. We look at our chart. The magic of the weekly vertical crossover continues to play its way out. We had a weekly vertical crossover, which is our biggest sign of change in trend. Remember, we are trend followers. That occurred on both the S&P 500 and the NASDAQ 100 back on the week ending the 25th of February. We then look for jumping in points the following week, and we have seen we've had 4 weeks of nice, clean, strong up movement. Looks like we're entering into our 5th week. We have a green up candle that's forming this first day of the latest 5-day candle. Derivative oscillator still heading up. Price percent oscillator still spiking up quite nicely. We go from the weekly to the 2-day, and we see that the price percent oscillator still heading up, losing some energy as we go along. It was stronger, but it continues to move up. And of course, we had the prior 2-day candle end on Friday, so this is just the first day of the latest 2-day candle, but it's a decent size up candle. We'll see how it finishes when it finishes drawing on Tuesday at the close of the market. Derivative oscillator losing some energy, and we see again price percent oscillator heading up, starting to flatten out, but again, still moving up nicely. We go from the 2-day to the 4-hour. What do we see there? We saw a big bump up in the morning with a bit of a pullback in the afternoon, but folks, I mean, up to when we look at the SPY, we see it up to 279.59. Again, quite nice. And of course, where did it end the day? It ended the day at 280.83. And of course, starting at the low 278.50. So things quite nice as we continue to watch. We do see at the end of the day that blue moving average convergence divergence percentage oscillator. Remember, our price percent oscillator is a percentage oscillator of the MACD. That's why we like it so much. It actually looks like it's rotated back over going down. But again, remember, once you jump in, that's when you look back and you use your bigger charts. And the bigger charts are still moving up. So we'll see how much steam this has in it. Some of you have been curious about that. And what do we say to do there? Well, you want to look at levels. Where have things hit before and topped out? And of course, as we look at the S&P 500, the real next level as far as the weekly chart goes, somewhere around 291.50. If we go to the 2-day chart, and one thing we're looking for is patterns here, and we look at where we had topped out before at different times, and are we hitting those same? Yeah, we're somewhere around that 281.22 mark, something like that. So keep that in mind if things bound off that. And of course, again, when we hit the topper, again, that's around 292, 291. So watch those things. We want to always try to find ceilings and floors and where things might pop up to. And of course, we also want to be looking, and we blew through the 200 period moving average back a while back. And of course, we've been well above that 50 period moving average for a while too. Always looking to try to find things that might tell us where the market's going to stop moves. So not seeing anything close at this point. We'll just continue to watch and see what we see. Let's go from the S&P 500 to the NASDAQ 100. What do we see going on there? Well, again, same weekly vertical crossover time back on the week ending the 25th of January, and things are moving up quite nicely. See price movements well above that weekly trend line. Derivative oscillators just barely gaining a little bit of energy. That price percent oscillator, though, our main indicator, continuing to move up quite strongly on the NASDAQ 100. We go to the 2-day chart, and what do we see? Price movement still well above that 2-day, a nice candle starting. Again, price percent oscillator going flatter and flatter. Derivative oscillator still losing momentum. So we go from the 2-day chart now to the 4-hour, and what do we see there? Very similar to the S&P 500, big bump up in the afternoon, bit of a pullback. in the morning, bit of a pullback in the afternoon. Derivative oscillator gaining momentum. Price percent oscillator still just about laminated there. So things are looking nice. And of course, where did we end the day? Somewhere around the last at 173.89. So that's quite nice. And we were looking for floors or ceilings rather, somewhere around the 173.31. So again, penetrated that quite nicely. And that's where we are as we end stocks, and we just continue to watch the magic of that weekly vertical crossover. What are bonds and gold doing? We will first go to bonds on the weekly chart. Remember, bonds are in a confirmed up move on the weekly, but getting weaker. We see this week starting off with some real weakness pushing through the weekly trend line so far. We don't call the candle until the week's complete. That derivative oscillator topped out way back on the week ending the 4th of January, been going down since then. Derivative oscillator losing all that momentum. Price percent oscillator now actually headed down. Don't know that it'll cross over going down this week, but losing momentum. We go from the weekly to the 2-day. What do you see there? Of course, it's crossed over going down all the way back on the 2-day candle ending the 15th of January. What it's really been doing is sliding sideways mostly. But again, the latest 2-day candle forming is down. It was preceded by a down candle. Price percent oscillator really moving over, even stronger down movement. Derivative oscillator gaining downward momentum. And the 4-hour chart down also, down strong in the morning, bit of a comeback in the afternoon. Overall down 0.30% for the day. Don't have a trade in bonds because the weekly's going in one direction, the 2-day in another. Just wait and see how things shake out in the bond world. Don't have a trade now. Remember, we're trend followers and we don't have a trend to follow, so we don't trade. That's the way you do it the smart way. Lastly, we go to gold. Gold down 0.10% for the day. Now, we had 5 weeks of prior up movement. In fact, the last week, strong up movement in gold, but we see things with a red open box candle so far this week. Means that, of course, things are tempering off. We see that gold prices drop down to where on the Heikin Ashi candlestick, it's sitting right there on our 2-day trend line. Price percent oscillator weakening, has been weakening since it topped back on the week ending the 11th of January. Derivative oscillator, the price percent oscillator now going flat. We go from the weekly to the 2-day. What do we see there? Well, trying to cross over, going down. We'll see if that's confirmed at the close of the 2-day candle at the close of business on Tuesday. A red spinning top, almost a doji now, which means indecision tending down, really a sideways slide underway. So the derivative oscillator's already flipped over going down, but that won't be confirmed until the candle closes at the end of business on Tuesday. We go from the 2-day to the 4-hour. Doji in the morning, then down movement in the afternoon. Price percent oscillator heading down. Derivative oscillator gaining downward momentum. So we'll see how gold shakes out. Again, if it rotates back over going up before that 2-day candle confirms a crossover going down, might have a trade in gold. Otherwise, we'll sort of be in the same position we're in with the schizophrenia we see in the bonds, with the 2-day and the weekly moving in opposite directions. Folks, that's where we are as we end the day on Monday, seeing how this week shapes up. Thank you so much for being with us. If you've not ordered our book, the 8th printing is being done right now. We're fulfilling all those orders that we received in the last week. We appreciate those, getting those out the door. If you are one of our Patreon supporters, would like to go ahead and get your emails in, cw@chartingwealth.com. Let us know what stocks you want us to review. We're going to be doing that here as the month runs out and the new month starts. We're going to have that special video that we do for you every month, tracking those stocks and ETFs you're interested in. And we're also going to send out a time for our conference call that we have with all of our Patreon supporters. If you would like that kind of special attention, then follow the link in the show notes to Patreon support. And if you've not purchased our book yet or just trying to figure out what it is we do here, encourage you to listen to the training videos that are available for free at chartingwealth.com. And also, go ahead and subscribe for free. You'll get these daily market reviews. You'll get special trainings that we put out for you. And you'll also, of course, get links in the show notes to our all of our different worksheets, trade worksheet, weekly market worksheet, daily market worksheet, links to how to buy the book, to all the other things that we put out there for you. We want you to participate. You need about 10 minutes a day to spend with us to learn what it is we do and how we do it. And again, you have questions, problems, concerns, write us cw@chartingwealth.com. All the best from the whole team here, and God bless from the whole team here at Charting Wealth World Headquarters.